Welcome back to Commercial Finance Experts Academy. My name is Su Trung, and today I want to wrap up on the construction financing episodes that we've had with Ann Walk in the last few days. She was very grateful enough to share. I was very grateful that she was able to share all that insight with us. And I want to cap it off today with a few insights that I've discovered over the years for helping with all the development projects that I've seen in the past and with all the clients that has came my way. Now, it is always crucial. I wouldn't say critical, but it is crucial that you always have a plan B when it comes to construction financing. Okay? Meaning that, yes, you better find out whether these types of clients have any access to extra money, their family, friends. So what does plan B? Meaning access to funds beyond and above what they currently have. They better have emergency funds through their family, through their distant relative, that they have capacity to borrow or at least access in case the worst case scenario happens. Or you would need to help them with private money. And perhaps that's where private companies mix, such as First Circles and a few others that I won't name right now, that be able to give you this kind of access to funds in the worst case scenario. Okay? Be aware what they can offer and at what stage and how much, because really some of them will not be able to give any more money. If, for example, the person has used all their cash already, that's 50% loan to value, maybe even higher. Maybe say that 65% loan to value now of their current land and cost to complete, but they haven't got to 65% completion. They've only reached not into lockup. If they haven't got to lockup and they're really leveraging a huge chunk of money, chances are even private companies won't be able to extend, because they know for certain these guys are idiotic or their budget is way out of whack and they haven't really figured things out. And this is the first time, and it makes things even worse. And if they're doing it themselves, yikes. All right, I wouldn't touch them with a 10-foot pole either. So I want to touch base on a few things. When I come across clients who says they already have money, they already have approval from a lender, even that's not a sure thing. I'll give you an example where I've rescued a lot of developers recently. Is that credit unions, they have access before, and in the past they've easily gotten money, and they assume that they can get money in the future. They said, I've been doing this project for 8, 9, 10 years with so-and-so credit unions, and they have always been to give me money. I have pretty much like a line of credit that I can access anytime, and the branch manager is my buddy. Sure, great. Why are you coming to me? Right? Chances are A, the branch manager has moved on, moved to a different company, different bank. Now they have no longer access to the branch manager. Secondly, they overextended already. It's great that they have access to these funds in the past, but I've come across to a developer that had 3 properties already with over the maximum amount that credit union has allocated to them. Like, for example, $5 million worth of loans and mortgages on spec construction that the developer was unable to sell, especially when the time is not the seller's market right now. It's more like a buyer's market for a single detached home. So they're in a situation where they can't sell the inventory quickly. They can't use that money to build the next house. So they got 3 houses. They're tapped out, and the lender says, sorry, you better sell that house soon or we're gonna pull the loan. And it's not even the branch manager's discretion anymore, because at the end of the day, the Treasury has given them an X amount of timeline, and they've already exceeded that. They maybe already even extended it, right? And now they have no choice except to wind up the project and sell, because it's a demand loan. So all construction mortgages, especially on the A side, is considered a demand loan. They can call anytime they want. And now most banks and credit unions won't put the developers and clients into foreclosure. They really don't want to do that because it costs them more money. But at the end of the day, they have to follow the rules themselves, right? I had a client recently with a low-rise project with one of the credit unions. They had money already approved, everything, and 1 more month, 30 more days, and they would have to need the money to pay off some of those trades, because they're getting up to the lockup stage, and they need the funds to be advanced to the next stage. They're in the time crunch. I had to bail them out. One of the biggest credit unions in the Lower Mainland told them when they reviewed the numbers again internally at the time of advancing. So here's the catch. They don't tell developers or anybody like that yes, we approve the loan now, but when we're about to advance it, we may review the loan package that we gave out to you, and if the numbers do not match, and in this scenario, his cost has gone up, and they review it with a quantity surveyor, because the project has taken 18 months to get a building permit by the city, and that's part of what caused the delay. So now everything has increased, the costs have increased, every piece of nail has increased, for example, right? In this scenario, they were forced to, based on the current guidelines that they have at the credit union, they had to either inject more money in or have some other collateral they can lean against, and the developer was totally against, and there was 3 other investor partners involved. They were not going to allow them to be put any kind of lien or collateral on their own personal property, right? I'm sure you wouldn't want to do that either. So in that scenario, I had to come in and rescue them. I found a lender that was able to do it, even though they were at the lockup stage and they were way ahead of everything. But I had, they had all the quantity surveyors, all the architect blueprints, the whole 9 yards, including environmental. We had the complete package, and yes, I was able to fund them at lockup within the 30 days that they required. Hey, be the go-to finance expert, and you help all these developers who may eventually get squeezed out because of the market or because of the lending capacity of the credit unions. And even though the banks, they're squeezing out as well. They don't want to touch this. They only want to use a current existing client to cater to existing clients. They don't want to add new clients. What do? You need to be outside of the broker channel. You need to be outside of that credit union, right? If you're only working for that credit union, you're stuck. So being an independent like myself and you, potentially, you're awesome. You are the expert go-to financing person that they'll go to when these events come up, which the future is unfolding. The unknown that's happening in our regulatory climate that's being increasing every day. Who knows? They're on precarious ground right now. You are there to help to be able to rescue them and make the money that you deserve to make, right? For those who are interested in it, check out my commercialfinancingmastery.com. We have a workshop here in BC and soon to be rolling out in July to Toronto. Check out on the page and we'll keep you up to date. If you have any questions, send me an email, sue@sharingbanksecrets.com, or comment below and you click like if you like this video. Hope you learned something new today. There is a lot of ways you can help out, but the best way is to be the source to access the funds when they need to. You are the plan B. If you're not the plan A, become the plan B. Okay? Take care. Have yourself an awesome day. See you in the next video.